What's up, investors? Back again, another stock analysis video. Today we're looking at Smile Direct Club, ticker symbol SDC. Shares are trading about $8.50. This one IPO'd late last year at about $16.5. It ticked all the way up into the $20 range. We see here a 52-week high of $21, a 52-week low of, wow, $303.65. That was made probably intraday after we had this big COVID-19 slide here in the shares, all the way down here. Now, shares have recovered very nicely, like most stocks have over the last few months or so, 2 months or so. This stock has recovered nicely and is now, like I said, in this $8 range. Now, shares are in a $3 billion market cap and not decent volume on this, about 6 million. I mean, it could be more, but not bad. Certainly something you can take a look at. So first thing we're going to look at is the annual report. We're going to look year over year over year, see how this revenue trending, see if there's any profits, things like that. Then what I want to do is jump into the most recent quarter, and I want to see, is this revenue gains? Is this revenue going to keep trending in the right direction in 2020 since they just reported their most recent quarter back March 31st? Then I'm going to point out a couple other things, a couple other business lines that they have. And then I want to point out something interesting about this company in their S1 filing, something they filed right before they went public. So let's jump right into it. Smile Direct Club, we're looking at their 10K annual report. This is 17, 18, and 19. Obviously, 17 and 18 are right before this company went public in late 2019. As we see here, here's our total revenue line here. These revenues ticked up huge from 17 to 18, and it's followed through, not quite as aggressively into 19, but still really nice growth. If they're able to bolt on, say, another 250 million, 300 million, and get to over $1 billion in revenue in 2020, I think that would be a really nice sign. And again, $3 billion valuation might actually be reasonable. Now, I'm looking at the shares and how they've reacted. I don't know if investors are anticipating that, and when we jump into the most recent quarter, we'll see what's going on there. Now, cost of revenues. This is a very, very high margin business. As we see here, they made $750 million in 2019. It only cost them $178 million. That's actually really high margin. That leaves you with a gross profit here of $572 million. But here's the rub with Smile Direct Club. I actually read the most recent conference call with management, and they actually called Smile Direct a marketing company. So that's what we see here. So look at selling and marketing expenses, $481 million. Okay, this is Facebook ads. This is TV ads. You've probably seen some advertisements for Smile Direct Club. They're spending a ton of money on marketing. We see that chews up a ton of this gross profit. And then finally we get down, that's not the only expenses. They've got general and administrative expenses. Those are big too. Those are even bigger than their marketing spend. And look how these have grown over the last few years. I mean, general administrative was 48 million. Now it's 580 million. So that's incredible growth, not necessarily where you want to see it. You'd love to see this line especially. I can understand you got a market in this company, but this general administrative, you'd like to see this start leveling out again. When we jump into the quarter, we'll see if there's any evidence of that. That leaves a loss of operation in the last full year at $490 million. That is over 10 times the loss that they had in 2018. That is a massive acceleration of losses. So that's what we've got going on here at Smile Direct Club. Massive growth on the top line. I mean, I wouldn't say massive. This is about what you'd expect from a company like this, especially when they're growing marketing spend as fast as they are. They better be growing this top line. But it is leading to these massive loss from operations. So that's why this stock is at $8 and not necessarily $80. Now, let's jump into the most recent quarter. Before we get to the results and kind of the revenue and the profits and things like that, let's take a look at the balance sheet, because there's actually something I wanted to point out here. So this company just went public, like I just said. And they have here, I see $224 million in cash. This is in thousands. And in the previous period here, that just about 3 months ago, they had $318 million. Now, they've burned through some cash as this company isn't making a profit. So that's not something I'm concerned with. But what I found interesting was this company just went public. Normally they have company like that usually has way more cash than that because they just quote unquote raised money with the IPO. But I want to point something out here. So you go to the S1 filing. Every company does this. We're early here on the S1 filing. This is like page 2 or 3 here. So near the top of these S1 filings, they actually read a lot like an annual report. But right at the beginning, they tell you what they're going to use the net proceeds of the offering, which is the IPO. And notice what they say here: to purchase limited liability company units or shares of SDC Financial LLC and shares of our stock from existing shareholders. So they didn't really raise money in the IPO that flowed to the balance sheet. As we see here, they only have $224 million, which is a lot of money, but they raised like probably over $1 billion in this IPO. At least, well, here's $493 million. So they actually bought units from this LLC. So they gave original owners of the company or original investors of the company kind of an exit here. And so not a lot, if any, of this money actually flowed to the balance sheet. Just wanted to point that out, as you normally see these early stage IPO companies more flush with cash than Smile Direct Club. And as we just saw in a full year, they lost from operations $490 million. So if they repeat that, well, guess what? They only have $224 million. That's probably not good. That's also why shares are in the $8 range and not much higher. So nothing really else on the balance sheet stands out. They do have some long-term debt. Again, you'd like to see that cleared out in an IPO. They didn't do that. So there's some debt on the books here, and it actually grew month over month here, or 3-month period over 3-month period there. So things are accelerating there. This balance sheet is not necessarily a glowing balance sheet. This company is definitely going to have to produce from the operations perspective. And so here we are, we're looking at a 3-month ended view back in 2019 and 2020. We see here solid growth year over year, but again, you'd like to see more, and you can annualize out these revenues. Let's call this 180, so that would be 367, back of the napkin math actually leads us close to a number to 750. So I know there's COVID-19 impact, and management talked extensively how COVID-19 impacted the company. They had to turn off their marketing. They had to close some of the Smile shops, or all of the Smile shops that they had open, and it affected this company quite a bit, especially from a marketing spend side, which this company relies on. But if you annualize this out, again, times this number by 4, because this is 3 months, so to get a window into what might happen in the future, you can times this number by 4, and we can see here we're not really seeing explosive growth. You'd actually like to see this number in the 250, maybe even 300 million range to really see this growth continuing. So this company appears to me like they're probably going to stall out in terms of that kind of revenue. Now, there is some financing revenue here mixed in. So we do have this 196. If you round this up to 200, then yeah, we're ticking up a little bit. We're ticking up to maybe 800 million total revenue. So that would be an increase, or a slight increase, over 2019, but we're not seeing this growth follow through into 2020. That would be a concern for me. Now, the high margins remain here. We have cost of revenue very low compared to how much revenue they're generating, and that leads to a really nice gross profit of 136 off 196 million. Boy, I wish I had a job or a business that kind of had those kind of gross margins. That's some good stuff. Now, but here's again the rub: the marketing expense alone exceeded the gross profits. So that's a problem. Now, let's take a look at general and administrative. So we saw in the full year that was at 580, and it looks like that's actually flattening out. Now, I read on the management conference call they furloughed some employees and things like that. So there could be some COVID-19 impact that reduced this number, but you would like to see they spent 580 on this general and administrative. This is annualizing out to below 400 million. So you'd actually like to see that. If this company could actually lower this expense and keep this at bare minimum flat, if not lower it, that I think would be a positive sign for investors. Now, marketing looks like it's trending in about the same direction. I know they had to cut off a lot of spend here late in March, especially here in the United States. So we'll see how this trends in the next quarter. But this all leads to, we had 130, call it 137 million in gross profit, but our total expenses here, they actually don't total them out for you. We've got a loss from operations here of 96 million because you're minusing this number and this number. So is that accelerating? Let's take a look. Loss from operations were 490. You can times this number by approximately 4. And yeah, we're close to 400 million there. It's improving a little bit, but not a whole lot. So that is not necessarily that good of a result in this quarter, albeit a difficult one with the COVID-19 and the virus and things like that. You come down here to a net loss and it's over 100 million, and you see how much that accelerated basically 5 times over the previous period. Again, I can see why the shares of this company are struggling just a little bit. Now, the last thing I want to do is come down here from a cash flow statement, because sometimes, the net loss, like I just pointed out, was 100 million, but there's some cost in here that you could make an argument that you add back in. So equity-based compensation, if you want to do depreciation and amortization, you can add that back in. Accounts payable, you can add that back in. We see the cash burn here in operating activities went from 38 million in last year, and it ticked up to about, call it $71 million. So this cash burn almost doubled. And again, we saw on the balance sheet, if you have a couple more quarters where you burn through $70 million, the balance sheet, again, was not flush with cash. Now, they do have credit facilities and some debt that I think they still have some room to pull on. So there's that. But I'm honestly not really super excited about the financials, and the sales themselves aren't growing rapidly enough for me to really get excited about shares. So buy, sell, or hold Smile Direct Club. I think if you bought down here in these $3 to $4 range, I got no problem. If you want to take a profit, by all means. If you want to sell a little bit of your shares because you pretty much doubled your money in a few months, I certainly don't have a problem with that. Starting a new position at this $8 range, I think, we have some supply here, some demand for shares here. They ticked up to here. It appears this like $8 range is a natural kind of pull point for this company. The problem is our revenues are not going to accelerate again like they did over the last 2 years. And I think you're going to see a flattening of revenue, and I think profits are still going to be non-existent. You're still going to have a massive, I would guess, $90 to $100 million loss for a period of time here. $500 million loss for the company, because they're averaging about $100 million loss in a quarter. And I think you can analyze that out to about a $400 million loss for the year. So I don't think losses are going to get better, and I don't think revenues are going to reaccelerate with this company to really drive these shares where they need to go. Maybe back up to $15, $16, break those levels, and then maybe you start making some new highs over 20. I don't see that happening, although this can be a watch list stock because they're still in the early stages. They have some things in the works with international expansion. They've got some partnerships that they're working on. I think they have some interesting marketing, and I certainly have been exposed to it. So we'll see what happens with Smile Direct Club. But for right now, I would definitely be on the sidelines with this one. Again, unless you got some of these bargain basement prices, and I'll let you decide what you want to do there because you've already locked in a pretty nice gain here. I'd probably put some stop losses here, maybe at that 7.5 range, because it looks like if shares break that mark, they tend to want to slide back, maybe pulled back down to these lows. So we'll see what happens. But it's not a pretty picture I hear with Smile Direct Club. I think they're going to have to do some fundraising either by debt or by equity raise. That's going to affect this valuation. That's going to affect dilution and things like that. Certainly not something I'd want to jump in right away, at least right now with Smile Direct Club. So hopefully that helped a little bit with your analysis of that. If you've got a stock that you'd like to have me cover here on the channel, leave me a comment below. I'd happy to get to it as soon as I possibly can. If you like what we're doing here on the channel, please subscribe. I want to thank everybody that's subscribing to the channel and hitting that like button. It really helps. And we'll be back again this week with another analysis. Good luck with your investments.